Welcome to today's session, guys. Welcome to today's session. In today's session, what we're going to go over a couple of pairs, how the market has opened, what moves we should be anticipating as Monday proceeds, as the rest of the week will unfold, what moves should we be taking advantage of, and so on and so forth. So stick with us and let's see how it goes. So we're going to start off with DXY. Obviously, as we understand, like DXY is the US dollar currency index, and most, like 80% of the transactions made in the Forex market have the US dollar involved. So obviously we understand like this is a very critical index, so it's a very critical thing that you need to look at before we actually make decisions on the trades that we're trying to take. So with that being said, let's get to it. So obviously you can see like prices, until prices closed on Friday, they approached this resistance. So let's start off from the daily. Okay, so prices approached this resistance here, which was that right there. Obviously the trend is still very much bullish as prices are creating higher highs and higher lows. So prices are obviously still pushing higher. The trend is still bullish. The anchor candlestick is still bullish. So obviously you understand like the prices are still bullish. But prices have reached the resistance, which confluences with the descending trend line. After hitting that, prices failed to break that and started pushing lower. Since the day began, since the markets have opened, prices have just been pushing lower. Now, our bias was that we should be anticipating to see prices perhaps break above here, give us a retest before you take a trade to continue pushing higher. That was the first anticipation. The second was that prices will bounce from here, retrace all the way until somewhere down here before we actually see a continuation in this trend. So if we switch to the 4 hours, we can actually see like the bears are taking control. The bears are pushing lower. The previous 4 hour that just closed about 5 minutes ago closed solid bearish, very strong momentum. So obviously we should anticipate to see prices keep on pushing lower from this perspective. So if we zoom out here, let's see if we can get any. Okay, that was a false one. So you can see here prices gave a false breakout to hit that trend line and support structure before they started pushing lower. Excuse me. So we also have that. So let me remove this trend line here, or let me put its visibility on a daily, because it's an important structure, so we shouldn't really ignore it. Right? So now prices, we can see that they are creating some kind of an ending diagonal pattern here from the 4 hour perspective. Prices are creating this kind of an ending diagonal pattern. The following structure that precedes it is this trend line here that's coming in play, and then after that we have this structure down here, this support structure. The trend is obviously still bullish, so what we should be anticipating right now are to see how prices will react on this trend line. As you can see, we have kind of a minor, it's not a strong structure, but we have a structure here. See that? Which also reacted here. So we have some kind of structure here, right? So what we should be looking at, what we should currently be looking at is prices once they reach here, what are they going to do? So how we are going to react to it is that should prices break below here and then give us an easy retest here, we're going to take a trade and swing with it until it reaches down here on this support structure. However, if right here prices come and then they lose that bearish momentum, we're obviously going to look at we're obviously going to take that bullish trade, get in fast so that we can actually take the trade. so that you can actually take the trade and then add on another trade here to keep on pushing high until this support structure up here, this resistance structure up here. So that's our gameplay for the DXY today, right? The bears are right now in control, but they are actually approaching a support structure. So we should see how once they approach this support structure, how they're going to react. If it's going to be a weak reaction, then we'll be looking for buys to push us all the way until up there. First entry will be here, second entry will be there. Should prices break below this structure, we are obviously going to swing with it until somewhere down here, and then from there we are going to look for buys, because obviously our bias is still bullish long term, right? So however it plays out, we're still gonna get beautiful trades out of it, right? So yeah. Now, speaking about this, guys, I know some people might say, like, why can't you have one bias? So in trading, for those that have been in the trading industry for a while can actually attest to this, or for those that have read the book Trading in the Zone by Mark Douglas, right? It's a beautiful book. So you should give it a try if you haven't read it. You should give it a read. It goes so in that book it states about 5 trading truths, right? One of them, he says, anything can happen in the market. As a trader, you need to be open to this. You need to understand it. You need to embrace it. Like, anything can happen in the market. So you may be anticipating to see a bullish move, but then the bears may come in and take over. So that's a possibility that you need to embrace. In the markets, the markets aren't going to always go your way. So you need to embrace that level of uncertainty, right? So anything can happen. That's why you need to always have a double bias. So that, for instance, okay, now let me put it this way. For instance, let's say we are bullish biased, right? Obviously, we anticipate to see prices keep on pushing higher and push higher. Okay, now let's say that was our bias. We are bullish biased and we don't want to accept that the bears will take over. What do you think will happen once prices maybe reach and then we take a buy, but then prices don't start buying, they start selling? What do you think will happen to us? Obviously, we'll start saying, okay, prices will come back, prices will come back. Once they go lower, we'll be adding more buys because we believe that's where they're turning around. If prices just form a small bullish candle, you're saying, okay, this is where they're turning around, they're going to add more buys. But in reality, it's that the trend has changed, and right now prices are actually selling. They're no longer buying. The trend has changed, and now prices are selling. It's just because that we don't want to embrace that uncertainty level, you know, like you don't want to accept that anything can happen in the market, which is very bad, because trading is nothing more than games of probability. And an edge, like for instance, we as price action traders, we use price action, right? So with price action, we obviously understand that it's our edge, and the definition, or the very definition of an edge, is that an indication of one thing happening over the other, right? So it doesn't mean the other thing cannot happen. It just shows that one thing has a higher probability of happening. So for instance, once prices reach here, we anticipate to see prices, perhaps if the bearish momentum is weak, we anticipate to see prices push higher. But that doesn't mean the prices can sell. It's just that the buys have a high probability of buying, but the sellers can also take over. So as a trader, you need to embrace that quote unquote probability status. Okay, nice. So that's based on DXY. So let's look at a few DXY pairs, then see how we can actually apply that today. We got USD JPY. Oof, look at that move. So since last week, we are obviously anticipating to see buys on this trend. We are obviously anticipating to see buys. Prices broke above this structure. As you can see on the left-hand side, it's a clean slate. There's no resistance all the way until it reaches that green line, which is the target. So you can see how prices took off. Prices just bounced like insane move, right? Now from there, obviously, I didn't get a trade. I didn't get an entry on this one because I was actually trading GU. I think I posted the GU trade on the channel, so you guys have seen it. I didn't take any trade on this one. The way I trade is that if I take, for instance, a trade on GBP USD, it has the US dollar involved, right? So I'm not going to take another trade that has the US dollar involved until the first trade is at break even. because if it's not a break even and then I take another trade, in case the US dollar, something happens with the US dollar, I'm going to lose both trades. And that's just putting too much risk or too much capital at risk. So I don't like doing that. I like to preserve my capital, right? Because as a trader, I believe that your first priority isn't to make money, it's to protect your capital. Because if you protect your capital, tomorrow you're going to have that money to come back and trade. Because opportunities are always there, they never end. Opportunities are always there. Years will come, years will go, traders will come, traders will go. Opportunities will always be in there in the market. But the armor that you have is the capital. So if you don't have the capital, that means you can't participate in the markets, right? Now, so that should be your first priority. Always protect your capital. And then after that, once you have capital, then you can actually go to the next priority, which will be to make money, right? So I always protect my capital. That's always my priority. That's why I never take two trades that have a similar correlation at once, if not even one of them is at break even. So I didn't take this trade. I left it running. I saw the opportunity, but I didn't take it because I was in the GU trade. So prices did push higher. Now, obviously, I'm anticipating to see prices keep on pushing until they reach up here. But currently, you can see the prices are kind of ranging. Since the market opened, they haven't pushed higher, they haven't pushed lower. Markets opened up here, closed lower, and then started ranging again. So it's kind of dancing in between. So should prices keep on pushing until they reach the targets, that's all well and good. We'll get it next time. But if prices start retracing and then they come back at around this area right here, we are obviously going to look for buys. We are going to look for buys if prices retrace until they come here. We're going to look for buys to take with them all the way until there. But in case it doesn't retrace and it keeps on pushing higher, oh well, we'll get it next time, right? So that's as far as USD JPY goes. We got Euro USD. Obviously, prices are still pushing lower. Bearish biased on this one because I'm bullish biased on the DXY, right? So this is actually a monster trade, guys. Look at it from the monthly perspective. Look at it from a monthly perspective. Look at this thing, man. Look at this thing. Like from the monthly perspective, it gives you that clear, beautiful picture. Like we have one day until the month closes. Prices broke out of this pattern and then retraced to retest this structure here, this broken structure, which correlates with the trend line, confluences with the trend line and the 0.5 Fibonacci key level. So this right here just shows you how much or how many people are going to sell from this structure here. And then the monthly is going to close with this bearish structure, this bearish engulfing candlestick. So that just shows like the bears are now in control. So obviously we should be anticipating to see prices keep on pushing lower. We should be anticipating to see prices keep on pushing lower, right? That's from the monthly perspective, which, you know, always looking at the bigger timeframes gives you that clearer picture of what's really going on. So from the monthly perspective, we've obviously seen that prices have a very high possibility of pushing low. Now we're going to the lower timeframes to look at what's really happening, the structures, the trends and all that. So I've switched to the daily. So the daily, here we have this structure. Let me remove this. We have this structure. Prices, after bouncing from that trend line, prices pushed lower, kind of ranged a bit here, retested that structure and then kept on pushing lower. So obviously we should be anticipating to see prices keep on pushing lower because we have a high, we have a lows, we have the lows here. Obviously, let me mark them. You see these prices came here, bounced off, came here, bounced off, came here, bounced off. So it's a significant structure, and then prices broke below that, right? So what we should be anticipating right now is kind of prices maybe come back here on this structure to retest. Prices to come back here to give us a retest on this structure before we actually see them swing all the way until down here. So the swing that we'll be looking for is for prices to actually come back and tap all the way down here, right? And it's a very significant move. Let's see how many pips is that. So from there to all the way down here, over 300 pips. That's a crazy move. We're going to witness a crazy move, over 300 pips. So obviously, This is a move worth taking. This is a move worth taking. So now we're going to the lower time frames to actually look at if we can actually get potential trades, potential opportunities. So currently, if we look at the daily, we see that we have this anticipation where prices are going to push higher before they actually start selling. So if we go to the 4 hours, if the trend had changed, we could have taken that buy until maybe somewhere here. But if you look at the trend on the 4 hour, you can obviously see that the structure is still bearish. Like we have a high, low, lower high, lower low, lower high, lower lows. So the trend is still bearish. And one thing as a trader that you should never do is go against the trend. Never trade against the trend. Like that's a sin. That's a sin. Like you're just throwing money. Like that's just throwing money. Never trade against the trend, right? Now, if the trend had changed and it had created some kind of a bullish structure, we would have taken the trade. We would have taken this retracement move. But because the trend is still bearish, we can't take the trade because we'll be trading against the trend, which is a sin. Never trade against the trend as a trader because the trend is always your friend, right? So we are not going to be taking this trade. Rather, we're just going to be waiting for prices to reach here. And then once they do, we're going to be looking for sells. No rush. We're in it, right? We're in it. We're just going to be patient with it and see how prices will play out. We got GU. Okay, so GU, we have a trade in that, so we're not even going to be talking about it. Okay, so it looks like prices went our direction on that move. That was a trade, I think, taken with the members of the elite group. I didn't share it in the public chat. So cool. This is gold. We have gold also. Gold prices broke below this. Let me take a screenshot of this first and foremost, man. Like it's a beautiful setup. So gold prices have broken below a descending triangle pattern. Prices have broken below a descending triangle pattern, and they're looking to come back to retrace here. Obviously, once prices reach here, we should be looking for a sell opportunity. We should be looking for a sell opportunity. Once prices reach here, prices present a confirmation candlestick, we're obviously going to take a sell after it presents a confirmation candlestick, guys. Never take a trade before it presents a confirmation candlestick. That's just gambling. So once prices present with a confirmation candlestick on this trade here, on this market structure, after the retest, we're going to take a sell and then swing with it all the way down there, right? So I think that's it for the US dollar. We can also look at JPYX. So JPYX is the Japanese yen currency. So obviously, if we look at it from the daily perspective, we can see how prices have been retracing, have been pushing lower. We had a bullish trend here, and then once prices reached here since December, at the end of December, started ranging in here, and then they formed a new trend. Like these were the lows, and then prices broke below the lows, kind of retested this structure, and now we're looking to see if prices will keep on pushing low, right? So from here, we should be anticipating to see prices keep on pushing lower, these being the first targets and these being the final targets, right? This is from the daily perspective, mind you. So we're just gonna look at the JPY pairs real quick. Okay. Euro JPY. Obviously, you can see here structure has been broken. Broken retest. So we should be looking to see a continuation for prices to push higher on this structure, right? And obviously, this was kind of a sideways pattern range. So the distance from the highest peak to the lowest point has to be the same distance from the breakout to where your targets should be. So obviously somewhere up here is where we should be placing our targets. But it looks like here there is no significant, there's a kind of a significant structure. So prices have a probability of reaching all the way up here. But obviously my first targets will be here. My second targets will be here. I'm not going to be greedy and swing for that. I'm just going to aim for my first targets here, my second targets here, and that'll be it. That'll be it. I'm not going to be aiming for that up there. But the structure, you can see it's a sweet, easy break, retest, and prices have a very high probability of keep on pushing higher. Right, cool. We got GJ, we got GBP JPY. Okay, let's give it a minute to load. Let's give it a minute to load. It looks like the network isn't that strong. Okay, wait. Okay, guys, so we're going to continue the meeting. So we're going to look at JPY, GBP JPY. So with GBP JPY, let's start from the daily perspective. Obviously, you can see here we had a break of this structure because prices had this descending trend line. And then here we had this support structure from the upside. Below here, it was a resistance. Prices broke above that resistance, created it into a support. And then you can see on Friday, prices closed with this solid bullish candlestick, right? So we should be anticipating to see prices keep on pushing higher. So on the 4 hours, obviously, we anticipated to see continuations. So we took a trade with the people in the elite group. We already took a trade on GJ. Right now it's still floating on low profits. It's still floating at about 29 pips. So, you know, we're in profits, although small profits, but it's something. So obviously GBP JPY, we anticipate to see a continuation of that bullish move. And from the daily perspective, as you can see it looks like the bulls are still pushing higher with a very strong bullish momentum. So I believe this is a great call. And if you look on the left hand side, we can see it's a clean slate, as there is no resistance until prices reach our targets up here, right? So with GBP JPY, we anticipate to see prices keep on pushing higher. We got CAD JPY, same things apply. JPY is falling, so CAD JPY we should be seeing dunking. Excuse me. So JPY, you anticipate to see prices rise because JPY will be falling, right? So yeah, those are the pairs on the JPY index. Although I wouldn't be potentially trading CAD JPY, because if you look at it, the structure in which it will be heading to is very close. Look at this. Like, it's how many pips? About 79 pips. Okay, now compare it to, let's say, GBP JPY. Over 300 pips. Let's compare it maybe to Euro JPY. About 160 pips. So also in your trading, something that you always need to consider is that you need to pick the best trade, like, because opportunities will always be there. So for instance, if you see an opportunity on Euro USD, GBP USD, gold, if you see any opportunity in those pairs, there's a very high probability that the other US dollar pairs are also presenting the same opportunity. So you need to pick the best opportunity out of all of them, right? So that you can place yourself in the best position to win. Same applies with JPY. The opportunities presented with themselves with all the other currencies, right? With Euro JPY, CAD JPY, GBP JPY. But we took the only trade that we took was on GBP JPY. Why? Because it presented more pips and it presented a better risk to reward. Like, it presents with a 1:5 right here. You can see I'm going to risk 1 to make 5, right? So it presented with a better risk to reward, and then it presented more pips. So it's like, okay, this is the best trade, I'm going to take this one. So in your trading, always pick the best trading opportunity out of all the other trading opportunities. That will put you in a better place to always be ahead of the game. So yeah, guys, that's my presentation for today. If you have any questions, the floor is yours, obviously. Or if there's a pair that you'd like me to break down, now is obviously your chance to ask for it. Yeah, welcome to the channel, guys. Obviously, if you missed, or if you weren't present from the beginning, this is recorded. I'll be posting it on my YouTube later on. So if you're not yet, subscribed to my YouTube, please do the honors. I'll be very much grateful. I'll be grateful. So yeah, if you have any questions regarding trading, or a pair that you'd like me to add to break down, now is your time. No? Okay. So thank you for your time, guys. Thank you for your time. Thank you for your time. I do appreciate you taking the time out of your day to